Hey, what's going on, guys? What's going on YouTube? In today's video, I got a great one for you. What I'm looking to do is talk about the structure of my portfolio, what type of industries, the sectors that I'm trying to target as I move forward, give you guys a little bit more of that oversight, some of that insight into me as an investor and some of the things that I like to do. So that way, maybe you can learn from it, implement some things on your own, obviously do your own research. I'm not a financial advisor by any means. And if you guys are brand new to the channel, my name is Dalton. You're on DLITS TV. On this channel, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you, you're definitely going to want to quickly jump on down, click on that subscribe button, turn on the bell notification. I post a ton of different content that you're definitely not going to want to miss. But anyways, guys, I don't know what it is today. Feeling a little slow, but I got my coffee right here. So let's see if we can make it through this video. All right, guys, before we get into the real meat of this video, I just wanted to take a second and just say thank you so much for the continued support on this channel. The last video I put out, our goal was to go over 10,000 subscribers. And by the time this video uploads, we're gonna be around 10,500 subscribers. So all you new subscribers, thanks for joining along. There's a lot of great stuff that I have for you in the future. And again, if you guys are new, you're just coming here for the first time, this is really the start of something that hopefully is going to continue growing into the future. I put a lot of time and effort into this. This is all side stuff that I'm doing. I work a 9-to-5 job as well. But one day, hopefully this is gonna grow big enough, be my primary source of income, and we'll be able to move forward from there. So again, thank you so much, guys. It does mean more than I can even express in words to you. And let's just jump right into my portfolio here. All right, so I know a lot of viewers are coming here just wondering what particular investments I'm actually invested in, what stocks I hold, what ETFs I hold. So right off the bat, this is the website I use to track all of my investments. You guys have seen it a ton in the past if you're returning, but if you're new, this is Track Your Dividends. The link to this is going to be in the description of the video. You can use this for dividend investments or investments that don't even pay dividends. It's just a really great way to track your investments. So I used to use an Excel spreadsheet, but now I use this website. It is pretty much free. There is paid portions to it, but I don't really think you need to access that unless you want to. So this is the overview of my portfolio. I'm not going to go talk about each one individually, but just so you guys have that insight. I know a lot of people come to this channel, just want to know the exact investments that I'm making. So I figured, one really quick way to do it is just show an overview. These are all of my investments with a lot of the information that follows. So if that's all you wanted from this video, great. There it is right there. But I want to talk about the structure of this portfolio. One thing that I like to do when determining a video that I want to put out on this channel is to look directly at the comment section. And one comment from the last video really stuck out to me. And this comes from Peter, who said, "DLITS, what are your thoughts around diversification by sector? I'd be interested to hear your thoughts in healthcare, considering the moves into J&J and Pfizer. Did you weigh J&J and Pfizer versus any healthcare ETFs? Thanks, great video." Well, thanks for the comment, Peter. It means a lot to see that support from some people. So anyways, I thought this was a really good touch point, and I decided to do a lot of research on my own into how I wanted to actually diversify my portfolio. So what I came across is a lot of like-minded investors and people that I really look up to as an investor. And that's people like, Graham Stephan, Andre GICS. I look at their content all the time. And one of Andre's videos actually stuck out to me very, very well. And that was his 100 holdings that he has. And in that video, he kind of talked about his diversification method. And I think it really makes a lot of sense when you break it down. So just touching upon some of the things that I took away from that video is that there are 11 major sectors that I think is really important to have some sort of backing in. You want to get your money into these just for that diversification purpose. It's going to help out your portfolio. You're not going to be too stretched out. And the 11 major sectors are what is known as the Global Industry Classification Standards, or GICS. And of those 11 industries, they fall under the category of real estate, industrials, consumer staples, healthcare, financials, consumer discretionary, energy, technology, communications, utilities, and materials. And I think that having these as a basis for any new investor, or as an investor who's been investing a while, just looking at your breakdown, it's super important to try and get your leg in the game in each one of those. So what I want to do is show you right now what my portfolio looks like in terms of that diversification. And on this website, again, they have a really great feature, literally called diversification, where you can click in, and I'm going to go into the Robinhood Dividend portfolio that I have here. And just like that, you can see my sectors, my stock breakdown, and all of this information at first glance. So one thing that Andre doesn't really do is invest in ETFs, because the way he structured his portfolio, he likes to say that he created an ETF without having that expense ratio, which I think is really cool. And I feel like, honestly, that's kind of the way a lot of my investments have been going, but I have invested in particular ETFs as well. So what I like to do is kind of cross ETFs off the list. I'm going to include them right now just because it makes the numbers a little bit more even. But if you were to look at my portfolio, I think that not having ETFs would be the best way to go about it. But anyways, ETFs right now make up around 22.67% of my portfolio. The next industry that I want to talk about, and one that I think is going to do extremely well in 2021, is real estate. And you might be thinking, oh, well, why do you think real estate is going to do well? Well, because of that corporate tax rate that's coming. I think that a lot of the stocks that are out there, a lot of the individual companies are going to go down a little bit. It might be a rougher year for some of them. And I think real estate, where they can take advantage of that corporate tax rate, there's a lot of different reasons why they are benefiting from this upcoming year. And what I love about real estate is real estate investment trusts are required to pay 90% or higher of their profits back to the shareholders. So it really speaks to me specifically as an investor, as a dividend growth long-term investor, and I love REITs, and that's what I look to do. So of these 11 sectors that I mentioned, what I'm looking to do is aiming to have no more than 25% into one particular sector, and then within each sector, I don't want to have more than 10% into one specific stock. So for example, real estate right now, I only have Realty Income, which I failed to mention in the last video where I talked about my $5,000 investment, what companies I see for the future of 2021. And I really, I regretted that after making the video, because Realty Income is one that I will definitely be front loading. I'll make it an emphasis to invest in, but I also want to add other real estate investment trusts as well. Some that I'm looking at are Medical Properties Holding, which essentially is going after some of those properties that healthcare companies, a lot of the healthcare and hospitals actually need to rent the locations from these companies, and the people that actually own those buildings, that's the type of stuff that I want to invest in 2021. So real estate, I think, is huge. I think it's going to be really great moving forward. The next sector is healthcare. Now this one right now is pretty high for my portfolio, and that's obviously from that last video. Still below that 25%, but if you took out ETFs, it's above that 25%. So I really need to start looking at other areas of investment as well. However, in the healthcare market, I really think 2021, it's going to do extremely well because of everything that happened with COVID. I think it really shook up the world, and healthcare is going to be more of an emphasis moving forward. And with everything with the Democratic Party in office, there's more emphasis in spending on healthcare and stuff like that. So it's going to present a lot of growth, especially in this next year, in my own opinion. If you look at the sectors that are going to do really well, I talked about it in a few videos ago. I really think that financials, healthcare, and real estate are going to be my 3 top players for 2021. So getting on to the next one, I have information technology. Now, tech companies have been pretty much holding the market up. They're always booming, Microsoft, Apple, stuff like that, doing extremely well. And I haven't been tech heavy like a lot of investors out there. And that's mainly because a lot of the market, in my eyes, is a bit overvalued. And I think we're going to have more of a stable level at some point in time. Obviously, I'm still investing in the market. I'm not trying to time it by any means. And I'm still going to add on to information technology companies as well. I think there's still a lot of room for them, especially, with everything going on, but that's just my own personal thoughts around information technology. Then we got consumer staples, and Johnson & Johnson falls under healthcare, right? But they're also a really solid consumer staples company as well. They offer a lot of those consumer staples. But the thing about consumer staples is, in a failing market, when the market's going down, this is more of a safety play. So I'd like to get more into consumer staples, because even if the market's not doing well, it's starting to go down, people are still going to need to buy these things, toothpaste, packs of gum. I guess, my mom's a dental hygienist, so that's kind of where my mind goes. But there's a lot of different items that you definitely need. Toilet paper, all of these different things are never going to go away. So it's a really good industry to start getting some of your investments in. I also got communication services. Mainly this is AT&T for my portfolio right now because of that high dividend yield, some of the growth that I see with them. a lot of their predictions, a lot of the analysts are saying that they're undervalued right now. And so that's kind of another reason that helps back my decision into investing into AT&T. Looking forward, I got consumer discretionary as well, coming in at 12.51%. And then looking at financials, which is just a measly 0.83%, which is one of the industries that I think is going to do the best in 2021. I myself invested recently into JP Morgan. And then essentially since that investment, they've gone up 15%. So obviously I wish that I had invested more back then into financials, especially with my own thinking that they're going to be doing extremely well in 2021. There's a lot of room to grow there. And then utilities is 7.67% right now. Energy is huge for me, huge for 2021, I think. So it's going to be interesting to see what I add here. Now, speaking specifically to Peter's comment about how I weighed that investment versus going into a overall broad ETF, I think for most investors, the best way to invest, if you're new, you don't really know what the stock market, you don't really understand how it works, ETFs, you can't really go wrong. They're very solid. You can find some with proven track records that have, 8, 9, 10% consistent gains year over year that also pay dividends. They're very, very solid players. But for me in particular, what I saw with Johnson & Johnson and Pfizer was more of a play on the vaccine and looking at what's happened so far. So I invested $1,000 into Johnson & Johnson, and pretty much the next day they came out with saying they have a one-shot vaccine. Now I'd like to say that I knew exactly what was going on, that they were coming out with that. I was doing all that research and understood, hey, this is something that's going to happen. But really, that kind of took me by surprise. So my portfolio from Johnson & Johnson, that stock alone went up around 5%. And honestly, when it comes to investing, sometimes there is a little bit of luck involved. And I think that was one of the scenarios where a lot of people kind of look at that. They look at the price I got in and they're like, hey man, like you should have told us quicker. I wish I could have got in on that. Well, one, again, not a financial advisor. I still wouldn't advise, just blindly copying what I'm doing. But two, that just happened to work out for me in the best way possible, I suppose. So that's just something to consider. And then obviously, so that was really my criteria for how I diversified my portfolio. And looking in the future, obviously, I want to add a few more of those sectors, make sure that I'm following industry standards. I want to make sure that I'm not investing, again, more than 25% into one particular sector, as well as not having more than 10% of my portfolio into one particular investment. Unless, it's an ETF that already has diversification, like SPHD is a huge holding in my portfolio. It's a very defensive play. It'll be interesting to see. I think there's a lot of money to be made in ETFs as well, but this is just, you got to find what works for you. And what works for me is, I like having some of that diversification into ETFs, but I also like to be able to pick and look at individual companies that I see value in for the futures. And if you guys have any questions about this, you have any questions about diversification, portfolio structuring, then, just make sure you leave it in the comment section down below. I try to get back to every single one of you that leave a comment. Sometimes, got me staying up late at night trying to get each and every comment back out there. But again, I really appreciate all the support you guys have been showing me, all those comments, all the likes on the videos. And, let's make 2021 the best year ever. So thank you so much for checking out this video, guys. I hope you have a great day.